Joining our conversation on how IDA will impact the energy sector is analyst Neil Dingman of Truist Securities. Neil, good morning. What do you take from the, I guess, what we can infer right now, either from the way the market is trading or from early damage assessments that in terms of what it might mean on an enduring basis for production?
Yeah, sure. Early on, I mean, again, that's going to be the assessment of how long the downtime. You hit it exactly, and that is that about 95% of not only the Gulf production, but the Gulf refining capacity was down. And obviously the million-dollar question is how long will it be down? Because both that production and the refining capacity accounts for about 20% of here in the United States. So we've even seen oil prices reverse this morning. Early signs are that they shouldn't be down too long, but obviously it's going to be the amount of rainfall and other things surrounding that. But the real picture is going to be, because it is a significant amount, as I mentioned, 20% of both refining and oil production is still a significant amount. And it's just going to be the total downtime.
And in terms of gasoline and other products, refined products, what does the supply situation domestically look like going into this? In other words, I mean, again, the way the market is trading, it doesn't seem as if there's any kind of a panic in there about shortages just yet.
No, I think part of that is you saw actually last Friday, in fact, the demand side of gasoline, which, these days it seems like demand is driving everything. Demand was down week over week about 2 or 3% on gasoline. So I think that's what the market is trying to weigh to say, OK, we know supply is going to be temporarily down, especially, the Colonial Pipeline, which is the major pipeline that ships gasoline from the Houston area to the East Coast. A good bit of that to the East Coast is still down. Could be down for another few days. So again, as long as the demand picture doesn't change sharply, but it's going to be interesting. We're into a holiday weekend, driving weekend, so things certainly could change around there if we're still down and we enter later this week.
Neil, are there any names in your coverage universe that you would be buying right now, given everything that we're discussing and everything that's playing out, whether it is around Hurricane Ida or in the case of something like natural gas? The fact that we've seen the price surge even before the hurricane to levels we haven't seen in a number of years.
Sure. I mean, Morgan, you hit it. I mean, one, because of the potential downtime, I'm probably not playing many of the offshore names right now. But again, like a Diamondback Energy, a pure Permian company, we think it's one of the best. We just upgraded pure Eagleford company, Magnolia Oil and Gas this morning. And then number 3, the largest gas company out there. You mentioned natural gas prices quite good. EQT tends to be we think one of the better stocks out there.
Just in terms of how the energy stocks have been trading and what they're discounting right now, obviously had a huge washout from the highs like in the spring and the summer, have bounced since then. Where do you think what are they dependent on? I mean, is it about the demand side only? We have OPEC perhaps going to come out with a little more of a supply, incremental supply this week.
I really do. You hit it. I think it is going to be about almost exclusively demand, because all these companies are staying very capital disciplined. So as long as demand just continues to steady rebound, what's interesting, the prices right now are reflecting somewhere around the mid-50s, and here we are almost at $70 oil. So as you said, even though that the stocks have rebounded here lately, we think there's a lot of room to run. I'm talking 20, 30, and in some cases 50 to 60% with a lot of these names, given what's being reflected in oil on these stocks today.
So then what is the biggest risk to your outlook, whether it's for the stock specifically or crude and other energy prices that are such a key part of how you're measuring them?
It's certainly crude, and it's certainly the demand side. If for some reason COVID-related, it was just a week or two ago, it seemed like China was pulling back because of COVID-related demand issues. We still don't know in the States. It seems like here in Houston, cases are surging again. We're almost back at some of the early levels. So again, if you would just tell me that going forward, demand is going to stay stable, I think this group has a large way to run right now. And again, 50% plus.
All right, Neil, thanks very much. Appreciate it.
Thank you for having me.